Good morning, everyone. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports, we would like to thank you for joining us on our breakfast meeting this morning. It is Monday, the 18th of October, 2021. As always, this meeting is being broadcast live on our Vetiva online page on Facebook and is also being recorded. The audio file may be shared with third parties and the meeting is set to last for 30 minutes. On our agenda today, we will get a recap of the country's latest inflation numbers from our economist Mbuku Omoyeni, after which we will move to Simbia from our Global Equities desk, who will take us through some African markets. Following this, we will move to our partners from IC Security with their updates for the Guinean market, and then we will conclude with Boston from Frontier Africa Reports. Over the meeting, if you have a question over what the speakers are saying, you may drop them in the Q&A box and we will treat them after all speakers are done. Without further ado, we will start off with Ibuku on the country's latest inflation numbers. Good morning, Ibuku.
Good morning, Dozier. And good morning, everyone. On Friday, the National Bureau of Statistics released inflation data for the month of September. And according to the figure, headline inflation fell from 17% to 16.63%. And we believe the continued moderation in inflation is as a result of high base effects from the previous year, as well as the inception of the mean harvest season. However, we noticed that inflation actually rose at a faster pace on a month-to-month basis. It's fastest since the moderation in inflation started in April. We regard the hike in month-to-month inflation to the restrictions on telecommunications in food-producing regions. We recall that due to security reasons, there were some telecommunication restrictions to combat insecurity. So this must have affected the supply chain, and as a result, that could have led to a faster month-to-month inflation, although it was not strong enough to influence a rise in headline inflation. We've also seen that the continued retention of subsidies has kept inflation on the downtrend, and we expect this trend to continue in the near term. So looking at food inflation fell to 19.57%, thus a little below 20%. And as a result, we believe this is also because of the harvest season. However, imported food inflation, which is related to imports, has still been rising consistently, and it rose to 17.19% from 17.12%. This could be as a result of weaker exchange rates, as well as the restrictions on food imports. So looking at core inflation rose to 13.74%. And core inflation has been in a zigzag movement over the past 4 or 5 months. So we believe the recent increase was due to the surge in the price of energy, of gas, cooking gas, as well as the foreign exchange situation. So we believe that over time, we could see further zigzag movement in core inflation. So looking at the month of October, we actually expect headline inflation to fall towards 16.2%. due to the sustained retention of fuel subsidies and increased food supply following the harvest season. On food inflation, we actually expect a sustained downtrend to 18.7%, as strong base effects continue to drive a downturn in food inflation. Core inflation, we expect core inflation to fall to 13.6% in October, because we believe the market could have absorbed the shock from rising cooking gas prices. So looking at the implication for monetary policy, in November, we're going to be having the final MPC meeting for the year. And we believe that the MPC might hold on to rates. The only factor we see that can influence a 50 basis hike could be a reversal in the monetary policy stance of the US Fed. As we recall, the US Fed has postponed its decision to suspend bond purchases till November. So by the time it makes a decision, we'll be able to see how that will affect monetary policy. For several emerging markets, we're already seeing rate hikes, but for Nigeria, we don't see that coming unless it is very essential, considering the fact that the CBN has a pro-growth stance. So that sums it up for inflation.
Thank you, Ibukum. We will now move to Symbiot from our Global Equities desk. Good morning, Symbiot.
Good morning, Dozie, and good morning to everyone. So I'll be doing a quick recap of Friday's equities market across some West African countries, and I'll be starting in the BRVM markets, where the composite index closed the week on a positive note, although marginally, as the index gained 5 basis points to wrap up the bullish week. The index that contributed the most to the positive close on Friday and for the week was the BRVM distribution index. As we saw, it gained 3.15% on Friday and with today return of 13.86%. This was on the back of gains recorded in CFO Cote d'Ivoire, which was up 7.28% and posted a significant capital gain of 30% last week. For market activity, ETI followed by Total Senegal and SIBC were the most traded names, as we saw a 101% improvement in total volume traded for the day. Yesterday return for the market is currently at 28.87%. Going into today, we expect the market to trade mixed with the possibility of the index closing down as profit-taking activity is likely to start. For the Nigerian market, last week started with the index closing down on Monday. However, we saw the market recover and the index appreciating in the next 4 trading sessions. So for Friday, the All-Share Index closed up 75 basis points, consolidating week-to-date return at 1.39%. We saw a positive market as the investors snap up names across different sectors. We had FBN and GTCO in the banking space, Presco in agri, Onifla in consumer goods, and Boa Cement in industrial goods space, all closing the session higher. For sectoral performance for Friday and for the week, we saw all major indices close in the green, with the banking index leading week-to-day return at 2.64%. And speaking to Friday's activity level, volume and turnover declined. However, comparing market activity for the week with prior week, we saw a significant surge on both fronts. Traded volume increased by 66%, while trade value improved by over 100%, and this was largely due to trades in FBN, which accounted for over half of total volume and turnover. Lastly, market breadth stayed positive as the last trading session was dominated by the buyers, leading to a total of 30 stocks advancing versus 8 decliners. So last week's activity was boosted by demand for stocks, majorly in the banking space, particularly in FBN, like I just mentioned, while the broader market also had investors buy up attractive names, thereby pushing the index up. Going into this week, we expect the latter to persist amid positive market sentiments. On a final note, United Capital released its Q3 numbers, where we saw gross earnings improving by 70% on the back of significant bump in the investment income and fee and commission income lines, leading to profit after tax also increasing by 82% to 2.8 billion naira. The stock closed up 4.23% on Friday to settle at 9 naira 85 kobo, representing a year-to-date return of 109%. So we'll continue to see how investors react to this impressive result. And that'll be all from the equities desk. Thank you.
Thank you, Symbiot. Before you go, a quick question. From your view in the market, how has participation been so far between local and foreign investors? Has the Eurobond issuance affected foreign participation significantly? Sorry, that's the question. Thank you.
Okay. So far, we have still continued to see more local investors participate in the markets, unlike where we usually have more participation in from foreigners. So it's still, right now, we're still about 70 to 60% of local participants in comparison with foreigners. So that means the Eurobond issuance hasn't had much significant effect on the inflows for from foreign investors. So, but hopefully going into the next quarter, we'll begin to see more traction from this space, given the ethics stability the central bank is trying to put in place. That'll be all. Hope the question was answered.
Thank you, Simbiat. We will now move to Daniel from IC Securities and their updates. Good morning, Daniel.
Good morning, Jose, and good morning to all that are on this call. I'll first start off with the Treasury bill space. Government of Ghana fell short slightly of its target amount at the regular Treasury bill auction on Friday. It accepted all bids tendered as it raised approximately 1 billion Ghana cedis for 91, 182, and 364-day bills. Yields for 91 and 180-day bills fell by 2 basis points and 1 basis point respectively, while that of 364-day bills rose by 6 basis points to 16.27%. We expect to see improved participation in the next Treasury bill auction. On the local currency bond market, the secondary market recorded buoyant sessions across the week, particularly after the initial pricing guidance for the 3-year Treasury bond was announced. Improved two-way flows were seen around the front end and the belly of the curve. We saw significant sizes of 2023 and 2026 maturity papers trading around 19 to 90.2 for the 2023 and 20 to 20.1 for the 2026. On the other hand, Government of Ghana raised approximately 963 million Ghana cedis, which was around 74% of the target amount at the 3-year auction last Friday. The 2024 maturity paper cleared at final pricing guidance of 19%. According to the bond issuance calendar, government seeks to issue around 1.8 billion Ghana cedis of a 6-year bond before October ends. We expect to see active sessions in the secondary market this week. And finally, in the Eurobond space, the Ghana curve closed the week in a negative note, despite other sub-Saharan African sovereigns closing on a positive note. The front end of the curve trailed its peers, with Ghana 2026 maturities closing around 10.40%, which attracted a fair number of buying care. The back end of the curve also dropped around 1.5 to 3 points last week. On the other hand, Ghana postponed sale of sustainable bonds until next year. We expect to see a bounce back of Ghana bonds in the coming weeks, characterized by the attraction of more buys. That is all for fixed income. Thank you.
Thank you very much, Daniel. We will now move to Johnson for Guinean equities. Good morning, Johnson.
Hi, good morning, and good morning to everyone. I'll be giving a recap of activities on the Ghana Stock Exchange for last week. Losers and gainers were equally matched in the ratio 4:4, with the overall market performance declining by 20.8 points to return 46.68% on a year-to-date basis. FML led the losers chart as it lost 8 pesos to 5 cedis, indicating the recent rally may have run out of momentum and investors were now looking to profit stake. MTN, CAL, and GCB, that's MTN Ghana, CAL Bank, and GCB Bank also recorded price losses, with selling interest observed mainly around foreign accounts. On the other hand, Bob advanced by 55 pesos to 4 cedis to lead a pack of gainers. Total Ghana, Enterprise, and Republic Bank Ghana completed the list of gainers for last week's session. Market turnover doubled to 7.7 million Ghana cedis from the previous week's session, with MTN Ghana accounting for over 70% of the total traded value. For the week ahead, market is expected to remain mixed as participants await the 3 key reports and to take informed decisions. Offers, however, are expected to continue to build around MTN and GCB Bank, with the chance of the benchmark index closing lower. Thank you very much and have a wonderful week ahead.
Thank you, Johnson. We will now move to Omorige, who will cover fixed income and currencies. Good morning, Omorige.
Good morning, everybody. On the back of the OMO repayment of about 50 billion that came into the system on Friday, system liquidity improved significantly to open at about 219 billion positive from the 5.59 billion positive that was recorded on Thursday. Despite the significant improvement in system liquidity, interbank rate tightened by over 863 basis points. As a result, by over 863 basis points, as players had to make funded provisions for the FS retail auction and the CRR debit. As a result of that, OBB and overnight rate closed at 19.5 and 20% respectively. For today, we expect interbank rate to trade at lower levels in the absence of any significant funded pressure in the market. The parallel market traded at about 573 naira to a dollar on Friday, while the earning window opened at 415.09 naira to a dollar on Friday. The highest trade that was recorded was 435.30 naira to a dollar, while the closing rate was 415.07 naira to a dollar. Brent and WTI gained 1% and 1.4% to open today at 85.73 and 83.4 dollars per barrel respectively on the back of increasing global demand. The TB's market closed last week on a very active note with bullish sentiment seen on the long-dated maturities. We observe continued interest on the long-dated maturities, especially the newly issued one-year paper, that's the 13th October 2022 maturity, as market participants try to cover their loss bid from the last NTB auction. Overall average benchmark rate remained unchanged at 5.02%. The OMO market closed last week on a quiet note with mixed sentiment seen across the benchmark curve. Few trades were executed along the mid to long end of the benchmark curve, particularly on the 12th April and the 4th October 2022 maturities, while average benchmark rate rose by about 2 basis points to close at 6.36% levels on Friday. The bonds market closed last week on a muted note with weak sentiment seen across the benchmark curve as market players traded cautiously ahead of the monthly bond auction slated for Wednesday this week. Trades were majorly consummated along the mid end of the curve, especially on the 2036 and the 2037 maturities, where average benchmark rate rose by about 3 basis points to close at 12.02%. The Eurobond market also traded on a very active note on Friday, as persistent buy-side interest we are seeing across the sovereigns. The most actively traded sovereigns were the Nigeria 2025, 2030, 2032, 2047, 2049, the newly 2051 maturity. However, the corporate space closed last week on a very flat note with little or no trade consummated across the corporate maturities. For today, we believe that the bonds market we trade on a muted note as market pattern on Wednesday, where we expect the TB's market to trade in line with system liquidity. That will be all for fixed income. Thank you very much.
Thank you, Omar. We will now move to Boston from Frontier Africa Reports and their own updates. Good morning, Boston.
Yeah, good morning, Jose. Good morning, everyone. Thank you very much. Let's get started from the aviation sector, because it looks like everybody's coming back to the reopening of economies and tourism and travel and leisure. So a number of African countries are beginning to rev up their aviation, commercial aviation sector. The news is that the DR Congo is planning to float a new airline, which will be called Air Congo. It will be owned about 51% by the government of Congo, DRC, or DR Congo, and then in partnership with 49% equity by Ethiopian Airlines. The new airline is expected to come on board over the next few days. That's before the end of October. In the meantime, Air Tanzania is also, the government has also given the airline about $260 million to buy 5 new aircraft to increase the number of fleets, the fleet that the airline has. Just as Mauritius last week or so also announced about $280 million injection into Air Mauritius airline to also start the reopening of the economy, tourists coming to Africa, to the island. So between Mauritius, DR Congo, and Air Tanzania, the news is good that the airlines want to come back very strongly, and all in the vaccination that we're seeing, and people that travel are beginning to happen around the world. The government of President Kenyatta in Kenya has buckled up to pressure from the public after it raised petrol prices about a week ago. Now the energy pricing agency, the EPRA, has reversed that decision, and then the Treasury has provided a 24 billion shilling subsidies to cushion the fuel prices that was raised for consumers. Now the prices is tapered back with about 5 shillings per liter of petrol and diesel as well. If we stick with East Africa, Tanzania is looking to develop natural gas reserves after her oil project is moving on, but getting a bit of hiccups in a manner of speaking. The new president for Tanzania is looking to, he has asked the former Prime Minister of UK, Tony Blair, to rebuild the country's reputation after the exit of the president that died. And then some key projects in Tanzania, like the vaccine distribution, is now being given to the Tony Blair agency in the UK to execute for Tanzania. That's under the new president, Suhulu, the woman who took over after Magufuli died a couple of months ago. If we move out of that and we move to Southern Africa, the countdown to COP26 climate change summit in November is just a few weeks, is just about a week or so away. Now, the South African banks are saying they cannot and they will not stop funding coal projects, which is considered as dirty energy, at least yet. Now, Africa is going a bit at loggerhead with the rest of the world in terms of the transition to clean energy. We're not spending enough. Now, some countries in the Western Hemisphere, in Europe and the US, are offering billions of dollars to countries like South Africa to help Eskom and a few others transit into clean energy, but it's still a very difficult conversation going on there. South Africa has said it will not take those aid. It will continue to fund coal energy. The whole issue is now pitching Africa, in a manner of speaking, with the rest of the world. In terms of the transition to clean energy, we're going to hear a whole lot more about this in the days ahead in the countdown to the COP26 event. Angola has given Musk, which is a European company, the contract for a record depth well offshore drilling offshore the Angola, part of still the pursuit of energy by resources by Angola, Africa's second largest oil producer. And on a final note, Egypt posted $1.9 billion balance of payment surplus for its full year 2020-2021. And that's about it for us this morning here on Frontier Africa Reports. Have a great week, everyone.
Thank you, Burson. We have now come to the question and answer portion of the meeting. If you would like to speak, you may raise your hand and you will give you an opportunity to ask your question, or you may drop your question in the Q&A box if you're joining us on Zoom, whereas those who are joining us from Facebook may use the comment function under the streaming video and we will respond to your question. Thank you. Okay, I see that we have no questions today. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports, we would like to thank you all for joining us today. If over the day you do have a question, please don't hesitate to send us an email at research@vetiva.com and we will respond as soon as possible. We again thank everyone for joining us today and we look forward to having you join us again tomorrow at 8:30. Good morning.